We're live. Hey everybody, Smart Silver Stacker here. Hope you're doing well. We have got to talk today because I believe that there is the possibility of a significant decline in the price of this stuff, physical silver, silver in general, tomorrow, Friday, October 7th. I'm sorry, October 6th, tomorrow. I believe there is the possibility for a significant decline, and we're going to talk about that in today's live stream. Thanks everybody who is joining in there. I see a few folks saying hello. I'm going to tell you what I think might kick off this significant decline. Also, we've got central banks around the world who are continuing to hoard gold. So we're going to go over the latest report. And we're going to have to keep this one fairly short today. So we're going to compress some information in here and I will get to the potential silver price crash tomorrow. Now, I do want to say before we get into that, I'm not forecasting that this is necessarily going to happen. It's just a possibility, a more significant possibility than on your average trading day, given the setup that we have going into tomorrow. And I want to look at what went on in the markets today, kind of to set the stage for you a little bit here. So we know that we've been experiencing this massive sell-off in the US debt market, spiking rates on US treasuries. Someone says, do I guarantee in the chat? No, I don't guarantee there will be a price crash, but I want to tell you why I think there is the possibility for a significant decline. I mean, we've been talking about this for weeks now, about how this sell-off, a pan sell-off event may occur, which could drive the price down to my forecast. My target would be about the $15 or $16 area. But let's take a look at markets today and see the setup that we have going into tomorrow. Okay, so we have got the 10-year yield coming back down slightly today. That's following the decline that we saw yesterday in the yield. So the bond sell-off appears to be staved off temporarily. Now, at the same time, markets continuing to look pretty weak, in the red for most of the day. Small losses on the indexes. But what's going on here is that markets are anticipating the jobs numbers that will be coming out tomorrow, the non-farm payroll, because we had this massive sell-off in the debt market, and that stopped on Wednesday when the ADP job numbers came out. So the ADP job numbers came out worse than expected. We added about, I think, 80,000 jobs. The expectation was for about 150,000, so it was a huge miss. So investors took this as a sign perhaps that the Fed will be able to slow down the rate hikes. They might get away from the hawkish narrative a bit. We might get a little bit of a breather. But the non-farm payroll numbers come out tomorrow. That is the widely anticipated numbers. Also, I do want to talk briefly about what gold and silver are doing right now. They're in kind of a holding pattern. You can see very small fractional losses on the day. But again, the markets in the precious metals also are waiting until tomorrow. Crude oil getting smacked down a little bit here. I do think that OPEC eventually is going to drive that price much higher. That's my forecast. But again, in a pan sell-off, we might see the price of crude oil sell off in a very big way as well. So the event tomorrow that could drive the price of silver much lower, and if it does, by the way, I will likely be using the opportunity to acquire some more. I'll be going over to sdbullion.com. That's today's video sponsor. Right now, new customers can get gold or silver at spot by visiting sdbullion.com/new, and they also have some excellent deals on junk silver at the moment. That's what I'll be looking at. But here's the thing. If the jobs numbers tomorrow, the non-farm payroll numbers, come out hotter than expected, if they come out high, and one thing that we have witnessed for the past 12 months or so is that those numbers have been painting a very rosy picture of this economy. Now, tomorrow, I think it actually would be a good thing for the markets if the payroll numbers come out lower than expected. And I do view these numbers largely as being manipulated, as being cooked. I mean, for the past 12 months, every single jobs print has ended up being revised downward. It's very unlikely that that would occur via random chance. So, these are massaged numbers that are designed to put a good face on this economy. But if they keep that up and tomorrow we get strong job numbers, very likely we are going to see the debt sell-off resume, and that may put tremendous pressure on these markets, silver included. So keep an eye out for those jobs numbers tomorrow. I would definitely be keeping some powder dry just in case. This is the thing that we all need to be watching for. But because markets are largely in a holding pattern right now, I've got some other news I wanted to get into for you. First of all, let's just take a look at the debt numbers because this is really the thing that guarantees that ultimately the price of the precious metals, gold and silver, is going to be moving much higher, if you ask me. We had covered the massive move up that we saw from September 29th to October 2nd. We had seen a $280 billion increase. I think it was $275 billion increase in the national debt over the weekend. Now, we got the numbers for October 3rd here today, and you can see it's only up about $32 billion from October 2nd to October 3rd. But I mean, that is really telling, isn't it? When the government is racking up a little over $1 billion an hour, and we think, hey, at least it's slowed down. At least it's not the $275 billion over the course of a weekend. So, yeah, that's going on. The debt is still rising tremendously, $32 billion over the last reported day. At the same time, we just got this data from the World Gold Council. Central bank demand still sizzling in August is their headline. Central banks around the world added 77 tons of gold to their global reserves in August. This is a report that came out yesterday. And you can see this chart here. This shows for the past several months, each one of these bars represents a month, the buying and selling by central banks. And if it wasn't for these 2 months here, you would actually have over a year of straight buying by central banks. And these months, it was kind of unusual situation over in Turkey where they had this issue with domestic demand, domestic issues. They had to stabilize the gold price, so the Turkish central bank had to sell for a couple months there. But they have actually resumed buying now. And over the past 3 months, the combined purchases by central banks, the net purchases, 219 tons. That outweighs all the sales that went on in April and May. So central banks understand the end game here. They see what's going on with the debt. They are loading up, and guaranteed, if we see a sell-off tomorrow in the gold and silver markets, what are we going to see central banks around the world do? They're going to go into the market and they're going to buy more. That's what they tend to do on these dips, especially the Chinese, who have been adding now for what, I think 13 months in a row. They have been adding to their gold reserves. In China, they just added 29 more tons. The total net buying since November, 217 tons. So they're loading up on gold. They understand what's going on. And I think that we should take a page out of the book of the central banks here, the smart money. I mean, say what you will about them, they're not idiots. I mean, that's why I think that this decline that we're witnessing may very well be intentional. It's a wealth transfer device. I mean, who knows? That's just speculation on my part. So I can't attest to that, but it certainly feels that way when you look at the numbers because, I mean, it's just kind of obvious what's going on here. If you raise interest rates and continue massively expanding the debt, that's a recipe for disaster, and that is what we are facing. I thought this story was interesting too. This is an old one. It's from the von Mises Institute back in 2015, but there was something interesting about gold stacking here and China stacking gold that I wanted to take a look at. So this story is called "Can the US Dollar Face Down the Chinese Yuan?" It was actually written by Jim Rickards, if you're familiar with his work, back in 2015. But there's just one little section about this that I thought was very interesting where he's going over the gold number or the numbers of China's gold purchases, which I think was pretty interesting. And let me see if I can find it here in the article. Of course, now that I'm on the live stream, I'm having a hard time pinning down exactly what it was I wanted to share with you. There's a lengthy article here. Here we go. Okay, so he's talking about the Chinese gold reserves here, and then he mentions in this paragraph here that all the figures regarding Chinese gold acquisition are misleading because China keeps several thousand tons of gold off the books in a separate entity called the State Administration for Foreign Exchange, or SAFE. And then he says that the acquisitions of the PBOC, the ones that they report, are small amounts of gold that are being transferred from this state exchange for foreign or state administration for foreign exchange, transferring them over to the People's Bank of China. And it's long been speculated that China does have considerable gold holdings in excess of their official holdings. But I kind of stumbled across this article and I thought it was interesting. Now, I mean, it's just Jim Rickard's word that this is happening, but I did a little digging into this and I pulled up this site here, which is the site for the State Administration of Foreign Exchange. It's a Chinese government website. This is the English translation. But I did think it was notable here that under their About page, under major functions, number 7 there, if you can see it, says to undertake operations in management of foreign exchange reserves, gold reserves, and other foreign exchange assets of the state. So certainly, if China was obscuring large amounts of gold somewhere, that would probably be the agency that would be doing it, since they manage all of their foreign exchange reserves and gold reserves. Again, this is just some interesting news that I wanted to share with you. Largely, we are in a holding pattern here, markets, until the jobs numbers come out tomorrow. Now, if we get weak job numbers, maybe we'll see the price of silver rally. I think that's less likely. I mean, just given how the Fed and the administration have been touting the strong economy and the hot jobs market as their excuse for continuing to hike rates. And I think that they're going to need some cover if they want to continue doing that, because even if we see weakening jobs numbers here in the US, I don't think that inflation numbers are going to be declining. So you got to kind of, if they're massaging the numbers, they're choosing what comes out. I think that they're going to try to make, again, the economy have a rosy face to give them some cover for these rate hikes. But I could be mistaken about that. I mean, it's anybody's guess what those jobs numbers will look like tomorrow. If I knew, of course, I wouldn't be talking about it here. I would be a billionaire, because I would just make a massive bet one way or the other. And if I knew what was going to happen, then I would be able to do that successfully. But it is something to be aware of, that right now we have this kind of clown world economics where if we get good jobs numbers, the markets may tank. And it's because, it's all about what the Fed does at this point. It's all about where interest rates go. And that's the only thing driving markets. But markets still are under this impression that these official government numbers mean something, that they're not, completely cooking the numbers. I believe that they largely are, but markets still seem to be using these numbers as real data points. And that's to our advantage. If we get hot jobs numbers tomorrow, which are probably fake anyway, and silver crashes, that's a great opportunity to stack more. Shiny Man, great name by the way. He says a technical setup on the chart is leaning towards down as well. Yeah, we've looked at that long-term chart for the silver price. I'm not going to pull it up again right now. I've made you look at that enough recently. But if you look at the downward channel that silver is trading within, it looks like it does have a bit farther to fall from a technical standpoint. I'm not a, technical analyst at all, really, but I can look at that chart and kind of see what it looks like, especially given all of these other factors that we have stacking up here. The debt is still exploding. The banks are all still under a tremendous amount of pressure. The government is still cooking the jobs numbers, I believe, and so that's why I think there's a real strong potential for a significant decline in the price of silver tomorrow. Keep an eye on the jobs numbers, folks. It's going to be a short one today. I got to run. But I do appreciate all of you tuning in. Hey, before I go, please smash that like button. We're at 56 likes. If we get it to 100 before we wrap things up here in the next few minutes, we've got 302 of you in the chat. I would really appreciate it. That would be awesome. It would help spread this word. And it would help to get this information out there ahead of time, because, if we see the price of silver falling tomorrow in a very significant way, I think, a lot of people will be scratching their heads wondering, hey, why is silver still coming under pressure? Isn't inflation going to run out of control? These guys, Smart Silver Stacker on YouTube and Lynette Zhang and her interview with him and all these other folks in the stacker community are saying buy silver, but why when it keeps falling? Well, the answer is that ultimately higher prices are baked into the cake, I believe, because of the massive deficit spending in Washington, the massive increase in the national debt, and the proclivity of the Federal Reserve to come in and monetize debt when things start falling apart. So we're at 83 likes. I do have to run. Thank you all so much. I really appreciate it. I know that was kind of a late call to action there, but if you're watching this later, smash that like button, help get the word out, and just stay safe, everybody. Keep an eye on markets tomorrow, because I think the rest of the year is going to be a wild ride. Stay safe and happy stacking, everybody. Smart Silver Stacker out.